Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil.
Paris rapeseed. In late June, the market broke up through and closed over a short-term upper wedge trend line and made a fresh onslaught higher, reaching the primary and secondary targets with a small descending expanding wedge pattern and rising in early July to make new highs not seen since July 2023, reaching up to the congestion seen in September 2012 between 513 3/4 to 519 1/2. Once there, prices fell away, but only down to a little short of the 2013 high at 464 1/4 and the medium moving average, currently 477 even, reaching it 6 weeks ago. The market then saw a rise, the same week peaking at the congestion at 504 3/4 and just over the neckline extension of the June to October 2023 head and shoulders top. That's currently at 501 1/4, only to fall away again of a small bear flag 4 weeks ago down below the medium moving average this time and under the dark blue highlighted lower bull channel line, currently at 469 3/4 of the June to mid-August very wide bull channel. Now, I did say this 4 weeks ago, and I quote, "This, I stress, may not be the final pattern here, but it is the pattern that is currently dominant and one we have to deal with. And I would thus treat the bull channel as the current feature with the neckline acting as a median line, if you like, until something else develops." End of quote. 3 weeks ago, something else developed, a July-based bearish shift pitchfork highlighted in bright red on my daily chart. I'm not in love with this bearish pitchfork and I'm quite happy to retire if it becomes troublesome, but for now it shows quite well the bearish angle of attack of this market. Prices today are in between the upper time overhead, currently at 473.90 and not too far away from it, and above the middle time below, currently 452.40, as well as in between the gold long moving average, currently 455.50, and the green short medium moving average, currently 475.90, and the mauve medium moving average, currently 476.90, both of these last two overhead. There's one other feature I'd like to highlight now for a fourth week, and that is the late April to mid-August head and shoulders top. This utilizes the same dark blue lower channel line as its neckline, and that's currently at 469.80. It is not a great example of a head and shoulders pattern, pretty ugly indeed, and it has so far not revealed whether it is a head and shoulders top or a head and shoulders continuation pattern, though today it's being tested from below, being pushed over by the market. So if the market moving back up, keep a close eye on this dark blue neckline and the bright red upper time, and ultimately the mauve medium and the green short medium moving averages. If prices do reject these resistances and turn lower, then apart from the bright red middle time, keep an eye on the 50% absolute Fibonacci line at 445 1/2. Now the final observation is to do with these moving averages. Since the start of August, prices have been roughly corralled by the overhead mauve medium and green moving averages, short medium moving average, and below by the gold long moving average. It'll be interesting to see what happens when prices finally do break out of these restrictions. Winnipeg canola. There has been and is a lot going on here, as you can easily see. I'll do my best to interpret it. Towards the end of May, the market moved up, breaking through the long moving average, currently 638.10, but soon after running out of steam on the upside from the sheer effort of doing so. However, in this process, the month of May became a monthly key reversal up, a longer term bullish pattern that initially I suspected might influence the market, if not now, then in the future. However, since then I've had strong doubts. You see, June did not see any immediate resultant move higher. Instead, prices chose to drop, making lows at the end of the month not seen since the horn bottom of February. The fall was finally stifled by a 2-day pipe bottom made at the end of June based on the May 2023 low at 611.10, and prices then zigged and zagged higher throughout July, and I suppose really into August as well. The initial zig was up to the combination of the long moving average and the June 2021 low at 655.90. The subsequent zag down was just over the May 23 low, and the following zig back up was towards the May highs, just over the lesser Fibonacci line at 679 even. The latest zag lower has been extended and saw prices dip down through all the moving averages, which had been far too close together for my liking. I'll deal with them shortly. But prices punched down through the 2021 low at 629.5, as well as the purple highlighted extension to the neckline, the April to June head and shoulders continuation pattern, currently at 620.10, and the May 2023 low. All this toing and froing created a wideish bull channel late June to late July, which I've highlighted in bright red on my daily chart. However, this bull channel did not last, and I laid out 3 weeks ago the reasons why. And I quote, "The first and most obvious is the previously mentioned concentration of all the moving averages in a small area. Specifically, they have not acted as supports, and at most, the long moving average has acted as a resistance back at the start of July." Excuse me. Personally, I suspected these moving averages may be more of a nuisance than anything else right now, but we shall see. End of quote. I said I would take time to deal with these moving averages again, and looking at them over the last 4 weeks, I've seen a new pattern emerge. Early 3 weeks ago, the market formed a bearish bow tie formation of the short medium moving average, currently 622.40, the medium moving average, currently 637.10, and the long moving average, currently 638.10. The only feature about them that is different is that the moving averages entered the bow tie formation in the wrong order, though they have exited in the right order. Now, part of a bow tie formation is what it does at the beginning, but also some 15 to 20 sessions after formation. So at this later time, there is usually a period of volatility and sometimes a further move in the direction of the bow tie. Thus, I warned you to watch out for any such action between the 28th of August and the 4th of September. We are now right in this significant period, and we have seen a base building over the last 2 weeks and the beginnings of an attempt higher over the May 2023 low, just and towards the purple neckline extension overhead, very close to it at the moment. So far, this is a reactionary move upwards to the recent efforts lower, but I would watch what the market does at the purple neckline and the 3 major moving averages, plus on other features. You see, 3 weeks ago I drew a bearish Andrews pitchfork in dark blue for the late May to late July action. This had been a bit of a preemptive move on my part, but I felt obliged to show this, as this is showing the bearish angle of attack, especially where it has congregated around the middle time, currently at 573.90. Activity over the last 2 or 3 weeks has shown how supportive the February 2024 low at 574.90 has been, with the market rejecting a move lower beyond this. I've already mentioned the overhead purple neckline and significant moving average. To this I would add the final piece, the overhead dark blue upper time, as the final piece, which is currently at 634.10, as the final piece in the overhead near-term resistances, and the one also to watch. Bursa Malaysia crude palm oil. Back in February this year, we had a key break higher over what eventually became the bright red highlighted broken upper time, currently 37.69, of the August to November 2022 bearish shift pitchfork. Yeah, it's that old. I still keep this pitchfork on my daily chart because looking back, the market hesitated and built a base on this very thoroughly broken upper time, and did so again throughout the month, this month here of August. The move higher in June, back up from the testing the bright red upper time, started as a counter to the monthly key reversal down in April, creating a small reverse head and shoulders bottom over May with a neckline extension, currently at 39.41, just below the current market. In early July, prices did rise but soon fell away, leaving, if you include the changeover gap, an island top on the first week of July. However, the decline was stymied for a while during July, but in early August we saw prices take a flyer on the downside, down through the mid-May to early August dark blue highlighted uptrend. There was also a lower bull channel line. and that's currently at 39.41. Prices continued their decline, and yes, you've guessed it, halted 3 weeks ago, down around the same old bright red highlighted upper tine mentioned right at the start of this commentary. As I said earlier, during August, the market has built a base for a move higher, mainly between the lesser Fibonacci line below 37.21 and the 50% Fibonacci line at 38.75. For a while, I looked at this action as, and I quote from 3 weeks ago, "We can look at the whole action now since early April as potentially one very large bearish halfway hesitation. If that is the case, then the potential on the downside is well below the current bottom of my daily chart, down in the 34.20 area. Quite a large move. Hence, I have drawn, so this is 3 weeks ago, an early April to early July bearish shift pitch hook on my daily chart to try and gauge the bearish angle of attack." End of quote. 2 weeks ago, I highlighted this bearish pitchfork in purple, and right at the end of last week, prices punched up and closed over the upper tine, currently at 38.81 for the first time. This week, prices have exploited this move higher, and I will retire this bearish pitchfork at the end of this commentary. There is one final point. It's a somewhat contrary point, but a point I've been stressing now for 23 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now? Well, for this I went to my standby on such occasions, the longer term monthly charts. And there was one clear standout level that needed to be watched, and that was the November 22 high of 44.08, 2022 high of 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level." End of quote. For the moment, I would still consider monitoring this 44.08 level as it's a longer term play. The absolute addendum I would put to this is I note the key reversal up and bullish engulfing pattern made this past day.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.